Investing in commercial real estate at the present time, I think offers investors a very sound return, particularly from an income point of view, which a lot of investors, particularly elderly investors, those that have got a fixed sum, are now looking for with interest rates falling, not rising. It's still very strong returns coming from the broad commercial sector. Past year has been pretty sound. The overall commercial, which is made up of office, retail and industrial and hotels, has given investors about a 10.5% return, total return, made up of income, around about 7.5%, and the balance coming from capital appreciation. Best sector actually has been hotels, which has been about 17% according to the indices, followed by office, which is about 10.5%, retail around 10 and industrial just under 10. So they've, compared to other forms of investment, they've been very sound. The prognosis for going forward is about the same. We don't expect it to be anything other than pretty steady at this time of the cycle, but there isn't a lot of supply coming into the market across all sectors, so it's steady as she goes. I think these days in particular you look for the length of tenure, the lease conditions relating to the particular tenants or tenancies that you'll have, the strength of those tenants, location of the buildings obviously, and the condition of the buildings vitally important, particularly today because we're moving into a more greener environment. So you'll see things called Neighbour's ratings, NABERS. They're very important because that's the energy ratings for the buildings. So the higher the rating, the better the buildings are. But it's that security of income which is very, very important. I can normally find value in all the subsectors of the commercial space, but at the moment I think the office market is offering pretty good returns. There's some hot spots. Perth, you'd be a little wary of some of the conditions there. It's aided by the mining sector. It's obviously taken off, and very high rents, very high rates per square metre. So you've got to be a little cautious of that. On the other end of the scale is Canberra, where there's an oversupply and the market's quite soft. So Sydney, Melbourne, Brisbane and Perth, and those sort of in that order are pretty good. Retail's a little soft at the present time, and that's because people aren't spending at the present time. They're paying down debt. Particularly after 2008, everyone's become very cautious, so discretionary spend is down. It's not out, and it's also being influenced by the internet, and the impact of that is having on some shopping centres. I like neighbourhood shopping centres, which are food-based, convenience-based. Some of the big regional centres, obviously, you access either through a Westfield or Colonial, similarly offer pretty good value. Industrials having a resurgence, particularly on the eastern seaboard and to a point, in extent, Perth, and that's caused by a move to distribution, particularly from retail, and there's a resurgence there, and the returns are pretty sound. So it's a matter of taking each one of those and then just finding that particular asset that you like. I mean, we bid on a lot of properties, we don't get many because we're a bit hard-nosed about what we pay. Unlisted funds have always served the community well. They have from time to time had bad practices creep in, and we've been through a period of that. Some funds have done very well over this period of time. Others that have had excessive gearing, excessive fees, have really hurt investors. So when investors are going into unlisted funds, they've really got to look at the quality of the management. They've got to look at the governance. They've got to study the fees. They've got to have a very hard look at what it is that the fund is buying. Those other things that I mentioned earlier, the lease covenants, etc., are vital. But I think it's a very good and safe place to be if you live by a couple of fundamental rules. REITs have had a pretty torrid time over this recent past. They were inflicted with a lot of debt that needed to be repaid. It wasn't really their fault, and I will defend them. Because they repaid around about $16–17 billion back to Australian and foreign banks, really when there was no particular need to, except the banks didn't have the money. So private investors that have used REITs as a very sound source of income were very badly affected over this period of time and are very suspicious of this sector. I personally like it. You buy very, very good assets at the moment, discounts to their true asset value, and it's a good source of solid income with resultant capital appreciation, which I think will come over time. So once again, you've got to be cautious and look at who you're investing in. But they've served their public well until this most recent past in 2008 through to 2010, and I think they'll recover in due course. They won't get back to where they were, that's a different era, but they will certainly offer that sound income and I think reasonable capital appreciation. We're planning to bring out our first of our income series. We've secured a brand new office building at Sydney Olympic Park, which is under construction at the present time, fully leased to a major international tenant for 10 years. That'll be yielding around 7.75% and about 100% tax advantaged in the first couple of years due to depreciation. So that'll be on the market in the next month or so. And we think offers particularly self-managed super and other private investors a very sound, safe, long-term investment in a A-grade or a 5-star office building that is under construction at the present time. That will be followed up by other buildings when we secure them. I said earlier that we bid on a lot of properties and we don't get them because we're very hard on pricing. This one is an exceptional asset, and we're very proud to be able to bring this to market. More information on Folkstone, you can go to our website, folkstone.com.au. Our code, as we're an ASX listed company, is FLK, and you can look that up and go to the ASX website as well.